Hi there, traders. This is Brad Gilbert with today's trading action. All right, now you may have seen the news. Euro tumbles as Macron calls snap French election. Now, before you sort of jump in and think, oh my God, cataclysmic, let's sell euro, it's not a big deal, right? Not yet anyway. We have to wait and see how the elections go, and then we can work out what's going on from there. Because you know what? When you look at the trading opportunities here, okay, and what's actually happening in the market, yeah, sure, euro's gone down, but that's just a knee-jerk reaction to the snap election. Now, if Macron wins, it's business as usual, and that's probably the likely scenario. So don't get too sort of caught up in that French election. Now, what is actually happening out there is, well, I really think Friday's move on the non-farm payrolls, right, where you saw all these moves with the dollar sort of jumped up, really, solid non-farm payroll numbers, but, slight increase in the unemployment rate. And there's just underlying sort of murkiness in there. To me, half of this move, right, if I just clear the screens, half of the move to me was actually the market extremely short. Now, you would have heard me in the commentaries. I was bearish as thinking this is the one. This is the number we're going to get. We get weakness here, and the dollar's set up to tumble across the board. And it was a big opportunity. So the market was actually very short dollars. Half the move is them getting out. The other part is some Muppets going long. All right, who's going long here? I don't know. But I tell you what, the US numbers are resilient, but just don't get suckered into the play here. I can see euro, sterling, Aussie, okay, Kiwi, dollar CAD, everything reversing back to where it was very quickly. It'll just take one number, right? But that's where this week's US CPI numbers come into play, right? We've got a big number. It could reverse the whole move. We know exactly what to expect, and that makes it a little bit easier for us. Of course, if those numbers come out strong, well, it confirms the non-farm payrolls, and we're sort of chasing our tail again. All right, now today, where is the prime action? Well, it's going to be on the UK employment numbers, right? Now, UK employment, well, like most of the employment numbers out there, they're problematic, right? Because you've got, usually just two numbers, okay? The unemployment rate, employment change. Now you've got average earnings to deal with there as well, and the traditional employment count unemployment change, right? So you've got a bunch of numbers here, and there is a lot of room here to have, some strong numbers, some weak numbers. You get volatility. It's chaotic, right? The smart thing to do would be just to let the numbers roll out, right? And you can still be trading within, 10, 20, 30 seconds, but you want to see the numbers, see what they are. Now, focus on the minimum maximum range here, okay? The unemployment rate, very important for 4.3%. The unemployment change, expecting minus 100K, right? And the range for that, minus 200 to minus 70, right? So very focused on, weaker employment numbers, right? So the average weekly earnings, etc., might sort of come into play afterwards. But the two top numbers there, the unemployment rate and the employment change, are the key two numbers that you need to be looking at. Okay, so just be aware. Some might be strong, some might be weak. I wouldn't be going with pending orders unless you are ready to take a loss on the chin, right? Doesn't mean you will, but that is a highly likely outcome. Funnily enough, there's no numbers here for the claimant count change, right? That used to be the number, but it's now drifted back now that the UK have gone to the employment change. So right now, that's all we've really got to really focus on as we go into that European session. It's going to be pretty interesting to see what's going on. And that's because when you come back and look at your charts here, right, we've got, if you're looking at sterling against the dollar, of course, it got whacked as well as all the other instruments did on those strong non-farm payrolls. So, you know what? It is picking itself up off the floor. Strong numbers. I can see a nice, easy move to the top side. Weak numbers, well, it goes with those strong US numbers, and we might get a nice cruising move to the downside. It is a little bit overbought, so maybe weaker numbers, which is sort of what the data is suggesting, that could be the trading opportunity as we go forward. Now, don't forget to look at your sterling crosses. Now, I haven't exactly done all my technical analysis here, but you might find a diamond in the rough here, right? So just go through your charts, look for the opportunities here around your trend lines, right? You might find something that looks good for a strong UK number or a weak UK number, right? I think sterling against the dollar has got a pretty good profile, but make sure you just check these out and give yourself the best chance of success by trading the pair with the best technical setup. All right. UK data, definitely the major focus for today. If you scroll down, we do have, scroll down the data page there. We do have a bunch of US Treasury auctions. So make sure you check those out. A couple of weeks ago, there was a pretty weak take up there and the yields went up, right? And that sort of forced the US dollar up. So that could be something to sort of pay attention to later at the during the North American session. All right, guys, that's it from me. Sterling, got to be on your focal points, and we'll see how it plays out from there. All right, guys, have a good one. All the best. Cheerio.